Hello guys, in this video I'll be explaining the difference between tax filing and tax payments. Now, tax filing is concerned with submitting financial returns or financial documents. The purpose is to inform the government of incomes and deductions. You want to show that you are transparent to the government. While for tax payment is concerned about the actual act of remitting the fund, the amount that is the tax. The act of actually paying it or remitting it is what is known as tax payments. Now, the requirements for each of them: for tax payments, it is mandatory that you do tax payments so long you are making profits. If you are into business and you are making income, tax payment is compulsory. But for tax filing, whether you are making income or not, it is not negotiable. You have to file. That is, you have to come out and be transparent to the government that this is what you have done. These are your documents. For tax payments, if you are not making profit, you are not making income, it is not mandatory. You are not going to have to pay tax. Now, the evidences for each of them: for tax payments, there is a receipt. Once you pay tax, you get the receipt for paying tax. While for tax filing, you get a tax clearance certificate that, okay, you have filed. So this is why it is very important that whether you have even made money or not, you do it, because there will be situations where you'll be needed to tender your tax clearance certificate, which the fact that you have not made profit will not suffice for you not having a tax clearance certificate. Now, another difference is that tax payment happens usually maybe for individuals who pay personal income tax at the end of the month. So it happens monthly or annually at the end of the year. For businesses that have to pay it as a lump sum and all of that. But for tax filing, it happens after tax payment has been made or after there is no tax to be paid. So once the year is over, you have to file that the amount that we paid for tax for the whole year, or these are the deductions that were made, and this is the reason why we did not pay tax for this whole year. And this has to be done for personal income tax. It has to be done latest by 31st of March of the following year. That's for tax filing. While for company income tax, it has to be done within the first 6 months of the following year. So tax filing happens after tax payment has been done. I hope this is clear, and I will see you in the next video.